Hello traders, Gary Wagner here. It is 11 o'clock in Honolulu, 4 o'clock in New York on Monday, 27th day of January 2025, and this is the evening report for gold and silver. Over the weekend, investors and traders first learned of a Chinese company that could seriously challenge the U.S. leadership in the development of artificial intelligence called DeepSeek has apparently produced a large language model that rivals many of the leading U.S. models at a fraction of the cost. This resulted in a major sell-off of U.S. stock market indices that took traders by surprise. One of the hardest hit was NVIDIA Corporation, which plunged 17%, the largest drop since March of 2020, erasing $589 billion from the company's market cap. The S&P 500 declining by 1.46%. That's a loss of 88.96 points, taking the S&P 500 down to 6,012 points. Hardest hit was the NASDAQ Composite 100 Index, which declined by almost 3%, closing at 21,127. That resulted in gold declining by 1.23%, a total of $34.30, taking February gold to $2,743.10. Gold is currently trading overseas, up $2.30 from the close in New York. The current fix is $2,745.50. Gold prices were neither hindered nor aided by the dollar. The dollar declined fractionally, down 0.10%, taking the index to 107.335. Silver declined by 46.5 cents, or 1.5%, taking March silver to $30.57.5. The question now is whether or not today's sharp sell-off in gold prices are signaling a potential correction or a one-off, as we saw on Monday, January 13th. If we look at the recent move in gold from the lows that occurred in the middle of December, just above 2,600, to Friday's intraday high of 2,796, today's sell-off resulted in excess of a 23% retracement. If gold continues to trade lower throughout the week, the next point we would want to look at is the 38% retracement. That comes in at $2,718. It would also mark the first occasion during this rally in which gold has had any significant correction. And realize gold has gained approximately $180 over the last month. When we compare the time elapsed as well as the price gained during this current rally and compare it to rallies throughout last year, it would seem as though this rally has a long ways to go, considering that the rally that started in October 2023 when gold was at 2,000 up to the conclusion right below 2,300 resulted in a 15.21% price gain. The next rally that began in the middle of February and concluded in the middle of April resulted in a 21% price gain. And the rally that began at the end of June when gold was at $2,380 up to $2,735 resulted in a 14% gain. With the exception of this small leg, this final fifth wave, major rallies tended to be at a minimum of 15% up to about 22%, resulting in a net increase at minimum of $300 to as much as $450. If that same formula holds true to this current rally, we would expect this leg of the rally to culminate right around $3,000 per ounce. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.